Hello and welcome. I'm Peter Gay, Portfolio Manager at PWL Capital in Montreal. And today I am interviewing Alyson Slater, a seasoned executive in climate risk and sustainable finance. So Alyson Slater is the Senior Director, Sustainable Finance at the Global Risk Institute. She leads the Institute's sustainable finance initiatives with the aim of supporting Canada's financial sector in the transition to a climate-smart economy and sustainable future. She brings 20 years of international experience to this role with expertise in climate change, inclusive finance, and sustainable development gained through her work as a senior executive at the Global Reporting Initiative and the Alliance for Financial Inclusion. Alyson brings the ESG perspective to her role as a member of the Continuous Disclosure Advisory Committee of the Ontario Securities Commission and represents the financial sector perspective on the Sustainable Development Advisory Committee of Environment and Climate Change Canada. She received her master's degree from the University of British Columbia and an honors bachelor degree of arts from McGill University, both with a focus on environmental management. Thanks so much for joining me today, Alyson. It's really, really great to have you and to be able to chat with you about these issues coming from your extremely well-informed and experienced perspective. So I'll dive right in. It is timely as we are recording this. Canada has just announced its emissions reduction plan, which is a big step. You've said one of the key questions is, how do I know if the assets I've invested in are going to remain competitive through the changes that plans like this are going to bring about? How should people be thinking about that?
Well, this is a key strategy that they have released, and it gives us a bit of a glimpse into the government's priorities and plans for reducing carbon emissions by 40% in the next 8 years. So this will be a massive structural change that we will undergo. And up until now, we knew that they had these targets set, but we didn't know which sectors would be the winners and the losers. And this plan starts to shed some light on where the priorities will be, the amount of investment and fiscal measures that'll be in place to help support this, and where we can expect new policy and regulation to develop. So some of the winners will be electric vehicles and decarbonizing transportation, for example, and all the value chain behind the development of those electric vehicles. Other winners will be carbon capture and storage. This is sort of a new clean technology that is emerging. Canada is a world leader in that space, and they want to scale this up to literally capture carbon dioxide emissions from the atmosphere and store them underground. So Canada, we are aiming to be a world leader in that space. There's other provisions in place in this plan for sectors like agriculture and even infrastructure. So it's good to have a look, and it's interesting to see how this will shape our future over the coming decade.
Interesting. And at part of that plan, there's also there's mention of the price on carbon and carbon markets. It's obviously a politically sensitive question in Canada, but also a really important element of how we're going to get there. Do you have any thoughts about that?
Oh, yes. The carbon tax, as we know it, the federal carbon tax is a cornerstone of this plan. And the government has said they're taking steps to make sure that the carbon tax scheme that's in place, mainly right now just on oil and gas, will continue no matter which government is in power over the next 10, 20 years. So this is the plan. They're trying to make sure that this is legislated in a way that's rock solid. Right now, Canada's carbon tax, it's going to be high. It's going to reach up to $170 per ton of carbon equivalent emitted, but it's on a very narrow scope. It's really only on oil and gas. The idea is to try to really push consumers like you and I away from things like combustion engines in our vehicles and oil heaters in our homes. So to try to really incentivize us to move off those high emissions technologies and embrace lower emissions or green technologies in our daily lives. So that's the goal with that. But globally, it's important to understand I think the carbon market globally. Big news at the end of last year, the world did agree on some fundamentals around a global carbon market, which this is a global issue. Carbon, of course, whether it's emitted in one country, it still impacts you in another country. So this is something that really we need to agree on globally. I think right now there's something like 120 different carbon pricing schemes all around the world, and it's priced as low as $6 a ton in China, which is the world's largest cap and trade program, by the way, up to I think the European cap and trade market prices carbon just over 70 euros a ton now. So a lot of economists project that it would need to reach anywhere around that $200 mark in order to see real change in behavior and people moving away from fossil fuels as a result of this carbon market. So I think it's something that's coming down the pipeline. Our heavy emissions industries are going to feel a hit, whether it's here domestically through our own policies or through border adjustments, which the EU, for example, has already announced. If we go to trade, say, some heavy emissions products, and I'm not talking about fossil fuels, but other products that are developed that have a heavy carbon footprint, we try to trade those into the EU, and Canada hadn't taxed those products, they will in the EU slap us with a tax to try to make that even and balance that up. So this is something that's going to be a part of our economy coming down the pipeline, and we're seeing some momentum here in Canada and abroad around that pricing.
Yeah, and it is. I mean, this is a big element in the evolution of globalization as we go forward, as these ultimate what are tariffs come into place, right?
Yeah, absolutely.
So, I mean, Canada's still obviously a very resource-based, primary economy. You've mentioned this concept of transition finance, and how should we think about transition finance in relation to our economy and what we're doing in Canada?
Well, because we are a high emissions economy, we need a ton of investment in order to move some of our existing industries and business activities away from high emissions towards low emissions. Right now, the conversation around green finance and sustainable finance is around bolstering investment for green activities like wind farms and solar. But what about transportation? I mean, shipping, trucking. What about all the retrofitting that would have to go on in infrastructure? So this is how do we move, upgrade and retrofit activities and infrastructure to move towards this lower carbon or zero carbon emissions. So this is a field of the broader sustainable finance market that we predict and project will grow rapidly. I think we did $1 trillion in the sustainable debt market last year between bonds and loans. And that was double from the year before. So this is just growing really, really fast, but we haven't seen transition finance take off yet. I think because of the concerns around greenwashing. What we need is some very clear lists and definitions and what we might call a taxonomy or standardization about what counts as transition finance, what really would qualify as something that would be eligible for transition finance, and what is just funding, dirty activities still. So in the absence of that, right now that transition finance market has not started, but Canada's in need of that. And I think the government's plan is a great step in the right direction to start putting some bookends on what that transition finance market should look like and its priorities. And I do think that we'll see a standard for that evolving in Canada and other high emissions markets as well in the next couple of years.
Interesting. And we'll come back to this question around how investors should be thinking about their portfolios and concepts like greenwashing and stuff. But before we go there, so Canada's now announced their plan, and we're all sort of digesting it and trying to figure out what it means. Where would you say large corporations in Canada are in progress towards delivering credible plans towards reaching net zero? Do you think the corporate space has made significant progress there, or what are you seeing?
Well, we saw a rash of commitments to net zero by 2050 made late last year in the lead up to an important international meeting called COP26. That's when the whole world comes together and negotiates around the climate file. And this was the
one in Glasgow, right?
Yeah, in Glasgow. It was just in November, and it was a milestone meeting. And that's where the world really agreed on these net zero targets. All the major economies agreed on this net zero by 2050, including China and India, although they ask for 10 and 20 more years respectively, but they have this they have made the actual commitment, which is amazing. And so companies, especially financial sector firms, were asked to align their portfolios and for companies their work with these net zero targets. It doesn't make a lot of sense for the government of Canada to have a net zero target and then have our financial sector continuing to fund beyond non-net zero, kind of moving us in the wrong direction. So we are seeing the big banks and pension funds have made these net zero commitments late last year. And we've also seen uptake broadly, actually happening across other sectors, including the heavy emission sectors in Canada. targets set by most of our key, top companies here in Canada. The question will be, what will be those net zero action plans and those interim targets? When are we going to see the rubber hit the road, and how that really translates? How do we reverse engineer back from that net zero by 2050 goal, right, and figure out what it means for our business and what we need to change and develop and invest in and move away from and embrace and then in the coming decade or so. So right now, I feel like we've seen the targets, and the action and filling in the blanks is what will happen in the next year or two as companies put those transition plans into place.
Right. There's still a lot of groundwork to be done to
yes,
make this realistic plans.
Yes.
Yeah. Do you think the pandemic has had a significant impact on the progression of these questions?
Well, it's interesting to see how world events like the pandemic and now the war in Ukraine are definitely impacting and having some, having an effect on the climate space. So if we look at the pandemic, I think there were both winners and losers. On the one hand, carbon emissions were cut back dramatically as the world was grounded. But what I always say to people is, can you imagine the entire economy was shut down, global travel and transit was shut down, and we still only reduced carbon emissions by, say, 7 to maybe to 9%. During that first year. So that goes to show how ingrained fossil fuels are in our everyday lives through all of our systems and all of our economies around the world. So even that level of shutdown, it made a dent, but we need that level of cut year on year, every year for the next decade or 15 years in order to get where we need to be to meet these net zero goals. And we can't do it in the way that we did in the pandemic, which was causing such economic disruption. So we need to find ways to sort of get those levels of reductions, but in a way that also keeps our economy humming. So this is the challenge that we face. On the other hand, I think the pandemic and its response showed us that it is possible. We are able to do things globally and in Canada when we face an emergency, and can take drastic steps quickly. Things that seemed unthinkable before they actually happened. So that gives me some hope for the sorts of policies and things we need to see happening quickly around the pandemic. And maybe just a quick comment on the Russia-Ukraine situation. So one of the big stories, from day one has been especially European dependence on Russian oil.
Right. And
of course, the Europeans being the leaders in climate with the most ambitious goals. And then, for this to be revealed that 40% of their energy comes from Russian oil was a real eye opener for a lot of people. They're not able to switch off overnight, but I would say it has accelerated their clean transition plans, funding, and sort of the way the economy is structured in places like Germany and others to far more rapidly move off Russian fossil fuels. In this case, this is because of geopolitical reasons, but move on to clean and green energy probably faster than they would have if this war hadn't broken out.
Let's switch to the investor point of view now. Broadly speaking, to start, what are, from your point of view, the ways that investors should be thinking about aligning their portfolios with their values and their environmental priorities?
Well, step one, look at your portfolio through the climate lens. If climate is one of your priorities, a lot of people just haven't looked at their assets and their portfolios through that lens before. Where do you see opportunities? Are there opportunities? Do you have opportunities for growth in some of the industries that will be dominant in the future? And where is your exposure? Where maybe you holding assets that might become stranded assets in the future, or lose their value rapidly as we start to approach some of these structural changes. So step one is just know what you've got from a climate perspective. And then step two is just taking the action. And we see this at the sort of individual level, but also at the institutional investor level. Some choose to move away from high risk assets. They make that choice. This is whether it's big D, I call capital D divestment, where you make a big policy and you say, I will not fund coal any longer. This is actually most big Western institutional investors have moved away from coal, but that extends to things like Arctic. And unfortunately, here in Canada, we've been hit by divestment from oil sands because of its high emissions intensity. Or is it low? Is it low, the lowercase d divestment, where you're just sort of looking at your mix and you're thinking, oh, okay, I'm just, I'm going to move away from some of these sectors or some of these regions because of that climate mix. It doesn't mean I have a whole divestment policy. I'm just sort of, I'm just rebalancing my portfolio with climate risk in mind, and it might look a little bit different. Others are engaging. In fact, shareholder resolutions are already double what they were last year on climate. Institutional investors engaging with companies and even filing shareholder resolutions on climate. They want to know more information. They want to see these transition plans. They want to see better reporting. They want to know that the board of directors of these companies are climate fluent, climate literate, and have this on their radar, all sorts of things going on. So being an owner of some of these portfolio firms, you can also engage, you can be a part of the conversation, and you want to see that company succeed in a low carbon future, and you can be a part of the conversation. So those are some of the ways I see investors getting involved.
Absolutely. Absolutely. So, I mean, part of that discussion is, are investors getting good information, and are there standards from which to make these decisions? What's, you spent a chunk of your career at the Global Reporting Initiative, where this was very front and center. How would you comment on the progress in standardizing reporting on, among public companies on environmental issues?
So reporting on ESG, as we know it, environmental, social, and governance issues, has largely been voluntary for the last 20 years or so. And actually, most major companies do some form of ESG or sustainability reporting in the public domain. This is normally maybe more of a through their public relations exercises or communications thing. But over the years, this is starting to have some teeth. So the IFRS, who sets the international financial reporting standards, in which Canada embraces, has actually expanded and created a new board called the International Sustainability Standards Board, who is putting out very shortly their first prototype on climate-related financial reporting. So this is not so much your impact on the climate, although that is a question. It's more about how climate change impacts your business. What is the financial risk and opportunity that you as a business are facing because of either greater storm damage or flooding, or some of the physical climate risk we're expecting to see, or that the low carbon transition may bring onto your business. And so this is the important sort of business relevant reporting that we're seeing evolving to becoming mandatory and standardized worldwide through the IFRS. Canada is taking steps to align with that. The Canadian Securities Administrator has looked at upping its environmental reporting requirements, aligning with this international movement. And I know there's a review underway of the Canadian accounting and audit standards that is looking to also align, possibly create a Canadian Sustainability Standards Board that would liaise with the IFRS body to make sure that we are aligned here in Canada with this sort of reporting. So if those firms that have this underway already voluntarily are going to have the leg up and are probably going to be able to meet these requirements faster and with greater ease, those that haven't started at all, it'll be a journey. And well, we've just seen the SEC in the US put their draft of the same sort of climate-related financial reporting requirements out for public comment. Of course, it's caused a huge firestorm of those for and against. But if even the US is doing it, this is really coming down the pipeline, and most companies, large and small, are going to have to figure out how to measure, manage, and report on their climate risk.
Do you think public companies and boards of directors are doing a good job of building governance around these things and making sure audit committees are on top of it and that they're taking action on this? Or do you think, where do you think in general corporate, I'll start with corporate Canada if you have thoughts on corporate USA, but boards in Canada are doing a good job of integrating these new requirements?
Well, I mean, I think from the learning curve, I do think those firms that are a bit more exposed are moving faster because they have the pressure a little bit, or they've got folks on the board that have that leadership and have that vision. So it's a little bit of both. So for example, some of the bigger banks in Canada. We're seeing the boards very proactively sort of educate and build up their climate credentials, and then put those governance systems in place. So using existing committees usually. So what does the audit committee have to do on climate? Oh, okay, well, they have to be ready to maybe set and review progress against targets. Be sure they're able to review and approve reports and data that goes out into the public. So they need to be fluent in this stuff in order to make sure that what's going out is right. Risk committees are front and center here, helping not only banks, but other listed entities improve their climate risk management. And they have responsibility for climate risk oversight. So there's a new skill set. It's using what they know, but kind of expanding out into some of these new issues and new techniques, as we see on all these things. Investment committees, same thing. So we're sort of seeing boards really integrate. I mean, the best practice is to integrate climate right through the governance structure and ensure people are equipped to take this on as a new issue, just as they do with any business issue. You know, they've had to do this with cybersecurity. They've had to do this with, you know, the talent crisis we're facing today, that sort of thing. So it's just another issue, and they're just using the systems that are in place to try to, you know, have that oversight and leadership that's needed. I have to say it's generally early days though for a lot of corporate boards. And that learning curve will be pretty steep, but I'm seeing a lot of interest. We do train boards of directors. I'm seeing a lot of interest, you know, a lot of engagement on this issue across corporate Canada.
Interesting. So you mentioned financial institutions, I think in your answer. What role are financial institutions going to play in bringing about change or in evolving Canada's economy around these questions?
Well, they're such an important player in this whole thing because of their exposure to pretty much every sector across the board. And I think they've been identified very early on, both at the international level and here in Canada, as playing a special role in helping to accelerate the low carbon transition and protect against the climate change, the physical climate change risk that we will face anyway because of historical emissions that are already in place. And, you know, Bank of Canada has said that they are concerned that climate change poses a risk to financial sector stability. And because of that, it has now the attention of OSFI, the financial sector supervisor and regulator, who wants to make sure that our institutions would be a part of helping to keep the financial system and the economy stable through any crisis, and that they themselves wouldn't collapse if a crisis is caused by climate change, whether that be acute or chronic over time. And so you are seeing the regulator coming with questions. You know, do you have enough capital allocated for a climate risk? You know, is climate priced into your credit model? These are tough questions. Have you stress test your portfolio against climate risk? So these are the new sorts of techniques and methodologies that are coming to the fore, and how we're seeing these being integrated into the risk management side. So it's not only about risk, of course, the upside opportunities there. And I think a lot of the banks have been early out the gate on the opportunity side, seeing a new market developing for sustainable finance, whether it be retail or commercial clients really interested in getting on board there. Green investments of all kinds are going through the roof. And that's been a real opportunity in a growth space for financial sector firms over in the last 3 to 5 years.
Right. Alyson, this has been a fascinating conversation. I want to really thank you tremendously for taking the time to share your insights and the benefit of your experience. I mean, a career that has taken you, from a risk management perspective, from a reporting perspective, from a financial inclusion perspective, part of that, you really come at these questions with an incredibly broad perspective on what's happening and where we're at and how much more we have to do. So thank you enormously for taking the time, and really, really appreciate it. And look forward to talking to you again soon, hopefully see how these things evolve over the coming year and more.
Thanks so much, Peter. It's been great to have this conversation with you. Appreciate it.